Shit regulation actually harms good actors much more than bad actors, and shit regulation means worse use cases. And if somebody wants to completely shatter the Overton window by launching a shitcoin, I like that because it now means more legit use cases have a better chance of releasing product that people use without fear.
This episode is brought to you by Ledger, the most secure hardware wallet trusted by 7 million users and securing 20% of the world's digital assets. We'll be hearing more from them later in the show. Hey Lightspeed listeners, we need your help. Lightspeed is conducting an audience survey to help us get a better picture of who our listeners are and what you want to see from the show. Think of this as our annual review. What do you like about the show? What could we improve on? If you want to contribute, visit the link in our show notes to fill out the survey and help us make a better show for you. Hello and welcome back to another episode of Lightspeed. I'm your host, Jack Kubanek, alongside Mert Mumtaz, as always, watch enthusiast. Mert, how's it going?
Correct. Watch enthusiast app title. It's going good. Much better than before. Caught up on the sleep. Getting ready for the next launch, which should happen pretty soon.
Yeah, we're recording this kind of unplanned news roundup episode because, as Mert said, he hasn't been sleeping much. It's been chaos in Solana land since Friday night when Donald Trump launched a meme coin. His wife also launched a meme coin. We hope that which was at the expense of Donald's meme coin. So thoughts and prayers out to their marriage. But Mert and I just wanted to get on the mic real quick and chat a bit about all the craziness that went on over the weekend and just start to digest some of this news. So I guess there's like two parts to this. There's just what happened to the Solana blockchain, because there were some like really unprecedented volume numbers that we saw after the Trump meme coin came out. And then I guess there's this separate, what does this mean for crypto side? So I think maybe it's best to start with just the facts of the case, what happened. So Friday night, I was at a bar. I was not near a computer, so I did not trade, but I opened up Twitter and it looks like Trump has tweeted out a link to a meme coin. It seemed like he'd been hacked almost, but no, that was not the case. This is actually a legit Trump meme coin. The thing raced to billions in market cap. Mert, what was going on from your side, just on the infrastructure side, as this trading frenzy kicked off Friday night?
Right. Well, on a personal side, I had just received a new 8 Sleep, my first one, because I have trouble sleeping. And so 8 Sleep is this wearable basically you put on your bed, and then it's has some nice properties for cooling or warming the bed, all these things. I was like, fuck yeah, I'm stoked for this. And so the first night that I use it, I slept pretty well, which is kind of a problem because I was receiving calls. And at first I thought the chain had went down. I just woke up and I was like, okay, there's a few pages here and people are calling me on Telegram still. The chain is clearly down. I'm going to kill myself. And then I looked at our Slack, so the Helios Slack. And I mean, Helios actually had nothing go wrong with it. We got paged because we have alerts for activity increasing such that we can make sure there's nothing funky happening. But my co-founder, Nick, had already handled everything and there was nothing wrong. And then he started saying, well, there's actually a Trump coin. I was like, there's a what coin? And that actually seemed to, that's how well the chain and the ecosystem actually handled that particular launch, because I didn't even know. And so that went well. And then a lot of good things followed on the infrastructure side. I'm not going to comment on the morality yet. Obviously, Meteora and Jupiter and all these DEXs, Radium, et cetera, start breaking their own records. Dan from Blockworks posted a few charts on how crazy the volume numbers have been, or the revenue numbers. So it was going pretty well. And The wallets didn't have troubles. Phantom Moonshot actually also was, I believe, #1 on the App Store for finance, which is pretty insane. And so, yeah, everything going great. And we start getting to the part of Twitter where once you see one chain succeed, the other chains start getting angry and they start making up all these things. And so I was like, okay, this is back to normal now. People are just in their weird PvP phase. And so I grabbed a beer. It was a very long day. And I'm obviously in a completely different time zone than the Western folks. Grabbed a beer, sat down, and then somebody in my group chat posted an image of Melania. And I was like, okay, that's obviously a scam. There's no way. She's probably hacked. And then somebody's like, yeah, Donald Trump just retweeted that. And then it was like, I tweeted the image of George Bush when he hears that the second tower had been hit. Like there's a meme where there's like, stir, a second coin is launched. And then I was like, oh shit. And okay, so here's what actually happened with that. This is the important part, which everybody on Twitter has gotten wrong, or at least misunderstood, and understandably so. It's not super simple. So what happens on Solana is there's two priority transaction lanes, let's say. One is Jito, and one is the Solana blockchain through the Agave client. What happened, it seems, I'm not sure if this happened before or after the launch, but it was right around it. Somebody nuked a lot of Sol on one of the exchanges, and there was a arbitrage opportunity from the DEX prices, and then the SEX prices. But this is the most important part. Jito, and you can see this from their tweets, had a performance degradation, meaning they couldn't handle as much volume due to probably unprecedented demand. They handle an insane amount of demand. It makes no sense to me. And okay, but what happens when people can't use Jito for that? They need to use the blockchain, the blockchain's main scheduler. Now, two problems with this. One is those transactions that tend to go to Jito are complex, heavy arbitrage transactions. And they are more than willing to pay high fees to land some of these arbitrages. And so what ends up happening is the fees on the chain start going up. But since they're also bigger CU transactions, compute unit transactions, there's less space on the chain for other transactions as well. So it's a double whammy. This becomes worse because, so for example, Jupiter is a good example for this. If you now have these trading systems, these quants, these arbitrage traders trading for Melania or whatever shitcoin on chain in these on chain markets, that's all good, but they're paying high fees and they're trading very fast. But if you're on Jupiter, what Jupiter does, and many apps do this, it's not just Jupiter, I'm just giving an example. Once they get the fee to set for the user, they put a max cap on that fee. So if you need $5 to land a transaction as an example, but Jupiter says, no, we're not going to let you go above 50 cents for a fee so that our users can actually afford these fees. That sounds good at first, but if you're not paying that fee, you're not going to get into that block for that market. So you're going to lock out your own users. And this was not just Jupiter. Quite a few apps were doing this. And it's not like they're doing it out of anything other than just like nobody could have seen the fees actually spiking that much. It's not an intention problem. And then now what happens is you couple that with failed transactions due to slippage because of the shitcoin, and then Coinbase having problems. And then some of the apps that I saw were actually not even able to show charts, which means it's purely a read problem. Like their APIs were not working to read the data. And so now you have like 6-7 different pieces handling probably the most demand crypto has ever seen in a 2-day period is what I would guess. I don't even think that's close.
Must be.
Yeah. And so you have all those things. And then, of course, you have Twitter people who don't actually know what's happening. In fact, there was probably roughly 4 or 5 people that actually knew what were happening, right? Jito, probably some Anza folks. And then since we actually serve those customers, but also can see the blockchain, but also I can see Twitter. You can put those things together. And so basically that wraps it up.
Celebrating 10 years of innovation, Ledger remains the most secure hardware wallet for your Solana and logins, trusted by 7 million users and securing 20% of the world's digital assets. In recent years, Ledger has built a robust ecosystem of products and services, making digital ownership more secure and accessible to everyone. Ledger's newest devices, Ledger Stacks and Ledger Flex, feature the world's first secure touchscreens, making it easier and safer to manage your Solana transactions and coins. With Ledger Live, you can seamlessly and securely manage and stake your SOL. Alongside Ledger Stacks and Ledger Flex, Ledger introduced the Ledger Security Key app, a safer alternative to traditional passwords, enhancing your overall digital security. Thank you to Ledger for making today's episode possible. I went through the Blockworks Research Solana dashboard this morning just to look for some statistics. So, okay, on January 17th, Solana, which is Friday, the day leading up to the Trump token launch, which again, Solana was getting a lot of usage in the lead up to this. It was 6.4 billion in transaction volume on Friday. Saturday, 28 billion. Sunday, 39 billion. Monday, 33 billion. Again, I don't have the numbers in front of me, but that's certainly an all-time high in volume for Solana. I would think it must be an all-time high in crypto. The stablecoin supply on Friday on Solana was $5.8 billion. Today, it's $8.8 billion. It added $3 billion in a 3-day span in terms of stablecoin supply as people tried to get enough liquidity to just trade these things. Meteora, which is sort of the liquidity venue for the Trump token, it had been doing around $500 million a day in volume. Saturday, 8 billion. Sunday, 10 billion. Saturday, 10 billion. Sunday, 8 billion. They 10, 20x'd what they were doing. The REV daily record was 27 million in November. So REV is this Blockworks Research data point that tracks fees and tips that a blockchain brings in. The daily record was 27 million in November. That felt astonishingly high at the time. It more than doubled on Saturday to 57 billion. And that's just priority fees and Jito tips going up that much. So that's a lot of numbers just to say that this was unprecedented, the type of demand you've never seen before. Another thing I found interesting is that these Trump tokens literally sucked the liquidity out of the market. Every other token dumped basically, except for Solana and tokens that were linked to World Liberty Financial. But, after the election, there was broadly every crypto price went up. That was not the case with this. Other crypto prices were down during the Trump coin rally because just all the liquidity was headed there. So we've never seen anything like it. Mert, maybe we could talk about Jito experiencing degradation and what that did to the priority fees, which Dan Smith kind of tweeted out a chart. The priority fees, while Jito was not functioning, were up 5,000x, and less transactions made it through. So, what caused that Jito degradation, to what you can understand, and why did the priority fees go up so much?
I don't know the exact root cause of what caused it, other than just increased demand leading to degradation. We can ask Lucas and Zano, but it's probably pretty safe to assume that it was just demand based. The reason why, again, the reason why this makes the fees go up on mainnet is because what is Jito? Why do you use Jito? Why should you use Jito, etc.? The reason generally tends to be if you want to compete for top of the block. So Jito has, I don't remember the exact number, I believe for Jito validators, they build 20% of the block or 30% of something along those lines. And so you can compete for the top of the block by using Jito tips, and that's where the MEV revenue comes from, for example, that the Rev also links to. And okay, but who wants to actually compete with that or for the top of block? Well, arbitrage traders, snipers for certain liquidity pools, sometimes sandwichers as well, all sorts of people, but a very niche group of people. And so they, for example, let's say there's an arbitrage trade and you're going to make $1 million from it. Well, then you'll probably pay pretty well to bid for the top of that space, right? It doesn't matter if you pay $1,000 to land your transaction for that one, for this auction, if the expected value is $1 million. Okay, so, but if Jito is not there for this, then these arbitrage traders need to do it through the main agave scheduler on Solana. Now, there's actually a few problems here. One is that the scheduler is actually quite inefficient. And I mean, I believe Alessandro, who is the core lead dev for Anza, he tweeted something before the Melania launch that showed that there's roughly 93% unused capacity.
Yeah, I wanted to ask you about that. That was really interesting.
Right. So that's right. You can kind of see how inefficient that already is. And it's handling this much volume and TPS while being that inefficient. Okay. And so what happens? So to put it together then, complex traders use Jito for arbitrages and bidding for top of the block space, or to be the first in some DeFi action like an arbitrage. If they can't do that, or if Jito capacity is reduced to do that, obviously some of these have to come to the main scheduler, but the scheduler is inefficient. And also, these traders are price insensitive because their expected value is greater. That's actually okay. The thing that's not okay is once that happens, two things happen. One is the blocks are packed less efficiently. So you'll see if you go on Dune, or maybe Dan has this, the compute units packed per block, you can actually see that as the demand got higher, the compute units per block went down, which seems like it would make no sense. But it's actually because the scheduler is inefficient, especially under loads like this. And then two, and here's the thing that actually I believe ruined everybody's experience to some extent, is that the ecosystem still does not set fees properly for transactions. The thing that I said about the apps locking their own users out of competing for these markets is actually kind of crazy, because Solana's a bit more opinionated on products, especially Solana teams, meaning, so Jupiter lets you set fees manually yourself. And I did that. I just wanted to test this theory out. So during that moment, I was just going on Jupiter and setting the manual fees myself, and my transactions were landing. Okay. But if you were using, for example, Phantom at the time, you weren't able to set your fees, right? Not on Phantom Swap. And I believe the only wallet you could do this with was Backpack if you turned on developer mode. That just goes to show you how, let's say, so like it's
bad when you have to turn on developer mode. Yeah.
Yeah. Like the users obviously do not need to know any of this. They should not know any of this. It should be just abstracted. But so then what happens is like, okay, my transaction didn't land, Solana sucks. You can't just say, well, my transaction didn't land as a user, therefore it must be that the app did not increase my fees to the fee API that they should have been using, right? Like that's just not gonna, but that's actually what was happening. So and then you can see this in Toli's tweets as well, where he's like, okay, so it turns out Jito is quite important, right? And so that's the problem. But the good news, of course, is that first of all, we've always known these problems. And as a result, we actually have basically all the solutions that just need to be rolled out. The scheduler is becoming more efficient. Alessandro is working on that. Jito is obviously scaling up. But then there's also FireDancer, which I saw some graphs where I think the Frankendancer client was actually packing these blocks much more efficiently as well. So that's quite promising.
My understanding was, because Jito's bundler went down in November amid all the AI agent craziness, and you could see that the median fee skyrocketed for the little bit of time that Jito was down. And so I think Toli's tweeted about this, but essentially the takeaway is there's a class of traders that are willing to pay a premium for the reliability that Jito offers, or if you're doing things like arbitrage, a Jito bundle, which lets you process multiple transactions together, is helpful. And so it's when Jito goes away, you lose that artificial lowering of the median transaction fee, and it spiked a ton. The other thing I wanted to ask about is, you say that like the Agave client was operating at 7% capacity. Like, do you understand along what axis? Like, why can't it operate at any higher capacity than that?
It is, well, it's just, the simple answer here is it's code, and the code is bad. And so, for example, if you're a leader, okay, here's how a blockchain works. There's transactions that people send, and then these transactions get put into a block. And then on Solana, the leader who's leading the production of blocks gets a few slots to do it consecutively. So 1 block, 2 block, 3 block, 4 block, etc. Now, I believe what's happening, I could be kind of wrong on this because it does change. It seems like a dynamic situation. But after, for example, the first block that's produced, it starts getting overwhelmed, right? So there's just, and it's not getting overwhelmed due to some weird fundamental reason, which is why I hate when people are like, oh, well, this is the modular expansion. It's like, no, no, no. The code itself is inefficient. It is literally not written properly. And like, okay, it sounds easy when I say it like that, but like writing good code for performance like this is very hard. Not many people in the world can do it. And I mean, not many people in the world, like the entire world, can do it. This is very high scale distributed systems, very low level systems engineering, etc. And so, but we have the talent to do it. And so you can see this. And by the way, if you're listening and you want to learn more about this, you can follow obviously Tolly, but Trent, Alessandro, Andrew, and Brooks, all sorts of different people from Anza, Rex, etc. And they write about this, but it tends to be quite technical. And okay, so the TLDR, the code is not efficient enough yet.
And so there's this code inefficiency, like we talked about. It seems like basically every app in Solana had some sort of issues with just letting users land transactions over the weekend. But all that to say, to my understanding, Solana kept producing blocks the whole time. There was not an outage of any duration.
Yeah.
Mert,
And also,
yeah.
One thing I'll say here, and this is where being a ship poster while also having an RPC company is useful, because we have tests for this. And we have several tests internally. Actually, they're external. You can see that. Let me link you. ping.helios-rpc.com. And it's a ping test. And basically what we do is we set a hard-coded minimum fee. It was roughly $0.001 during all this. And it landed at 100% rate, meaning when everybody was saying they can't land transactions, yeah, correct, they were not able to land transactions. But for simple SOL transfers, we were able to land every single transaction at 100th of a dollar, right? And my point with this is simple. It's not that the users are doing anything wrong or that the apps are doing anything wrong. It's generally that we have an education problem or an integration problem where it's on us to help these developers understand what's going on better so that they can utilize the chain better, right? The chain is a very dumb construct. As I said, the chain is simply the system that you send transactions to, and then it makes them into blocks, and then make sure that everybody agrees on those blocks. That's all the chain does. To use it, the developer experience, unfortunately, is not as simple as it should be yet as well. And I think it actually is mostly downstream of that, the education/developer experience.
And those successful pings have to do with local fee markets, right? Like, could you explain more deeply why it is that you were able to land transactions 100% of the time?
Yes. So these are isolated transactions, meaning they don't interact with Jupiter. They don't interact with any of these tokens. They simply send Solana SOL from one address to another with the lowest possible fee, which at that time was 0.001. That's it. And because what people don't understand is that fee markets on Solana, the local fee markets, are actually a very new construct. The problem is that everybody's been talking about them as if they existed this whole time, but they didn't. They're actually quite new. And because when they were released, they actually didn't work at all. And so there's still a lot of outdated information from all basically everywhere there's outdated information. And so what needs to happen is it's mostly an education problem, in my view. Obviously, there's problems with the scheduler, as we already said. We already know this. But teams, for example, some of the teams, the way it works on Solana is when you're about to land a transaction or sign a transaction, there's a certain number of compute units you request. You say, hey, I would like to have this much compute units. And then there's the actual amount of compute units you use, right? Think about this for a second. Imagine you bought a football stadium worth of real estate, but you're using, let's say, a bachelor's studio in New York City type of space. You just wasted all that. You're paying for the stadium, but you're using the bachelor's studio. And that's basically what happens very frequently. Some of these big apps, I'm not going to name names because I don't think it's like malicious or anything. It's just, again, it's an education thing. And so you need to minimize your compute units. You need to set the fees properly. But then also, you need to understand that the way the fee markets work is that there are many accounts, and each of those accounts have different limits. So the blockchain, the blocks themselves might be much bigger, but if you're only writing to that one account, you are already constrained. And so what you might want to do is use some sharding scheme to write to different accounts, depending on whatever scheme that you've used up. And this is why the local Solana transfers work easily, because they just write to accounts that are not touched, right? We're just using 2 random accounts.
I want to ask, Mert, you on this very show predicted Solana downtime sometime in 2025. As we said, there was no Solana downtime during, one of the biggest demand events in the history of crypto. Does this change your view on a potential Solana outage? How likely that is?
No, it doesn't change it. I'm pretty sure there will be another outage. I don't want to say I'm pretty sure. I'll say I have my concern is over 30% of another outage in the future. And that is because there are going to be a lot of new things that are shipped, right? There's a new scheduler, but also fire dancer and all that. There's a lot of new things coming, which is double-edged sword, because it's good that we're making progress and accelerating all this stuff. But every time you introduce a new change in a complex system, you don't actually just introduce that one variable, because everything else interacts. So you're actually basically exponentially multiplying the amount of things that can go wrong to an extent. And since humans write software and humans make mistakes, I would expect mistakes.
Interesting. I would have thought you would have shifted your perspective. I predicted in my 2025 Solana predictions no downtime. So I was sweating a little bit, but so far my predictions are on track. My biggest prediction was I think Elon launches an X token, and with the Trump token, seems like it's moving in that direction. So we'll see. But that's anyways. I guess now we can just get into zooming out. Like, what do we make? What do we make of all this? So maybe the first thing I'll just throw out on the table. These tokens were endorsed by Trump, by Donald Trump and Melania Trump. It's unclear exactly the nuts and bolts of who was behind these tokens, although there's like a chart of the distribution, and a lot of it went to CIC Digital and creators. And CIC Digital is a company that Trump has used before to launch like all the various kind of merchandise he's launched to raise money. Trump has been known to try to profit off of his likeness and his celebrity, and his entities basically own 80% of the token. So Trump and Melania were both very personally enriched by this meme coin launch. I think Trump's paper holdings were worth like tens of billions at one point, which is really crazy. Obviously, he could not sell all of that for tens of billions, but on paper, he was worth that much. Does that bother you, Mert? Like, is this a grift, a cash grab, and is that a bad look, I guess, for crypto more broadly?
Well, it's certainly a cash grab. I don't think there's any question about that. it's certainly a cash grab. It's certainly it's a cash grab. However, I don't think that necessarily means, and I wouldn't do it myself, but you, and perhaps here's where my libertarianism gets me into trouble, which is that everybody who's buying this token knows what they're doing. Maybe not everybody, because they just actually did onboard some new people, but roughly 80% of these people that are actually trading this coin, they know what game they're playing. They're saying, I think this token is going to go up, so I'm going to try to make money. It's a casino. They're trying to bank on the game being played, right? Everybody, they're just trading, okay? And so that part I think gets overlooked because there's zero agency assigned to these people. Okay, now is there the marginal person who is like, hey, I just heard about this coin, son, how do I buy it? Should I do you think it's a good investment, or et cetera, all this stuff? Yeah, there's probably people like that for sure. That being said, I don't know, I get pretty fed up with kind of the victim mentality when people do this, because like, what are they trying to do? Are they trying to put money into the system so that they can raise money for, I don't know, Alzheimer's research? It's like, no, they're trying to make sure that they have a better retirement or something. Everybody knows the risk of the stock market, right? That's why you buy ETFs. That's why you buy all these other. Everybody knows that investing or trading has a lot of risk. Okay, so I don't really buy the, the
Moral
most
panic.
of the other arguments. Yeah, it's like, what I would say though is like, yeah, from Trump's perspective, it's not. I would not say it's a high integrity move. Then again, we don't know what they're going to do with it. I doubt they'll do anything useful, because people forget this is not like the first time, as you said, Trump has done something in crypto. He had already launched a bunch of other shit. I think he launched trading cards on Polygon or something.
NFTs,
so this is not, this is not the first time. And so, but what I make of the whole thing is that it's extremely bullish for the simple reason that the biggest thing holding back crypto, I would say, especially in the West, has been the fear of God in terms of regulation, right? Nobody even risked or considered launching tokens, or even offering staking services, or like sharing revenue back with their stakers, or normal stuff before, because of the fear from the previous administration. And so if the new president comes in and says, I'm just going to launch shitcoin, then perhaps you can be somewhat certain that the regulation will be much more lax. And as a result, right, one of the biggest problems in all of tech, not just crypto, for the past few years, especially in Europe, has been how much regulation is killing tech, which is why now you see the rise of the tech brothers, and why they're now getting into government, as you can see with Elon and whatnot. And so I think it will lead to more scams, obviously, but I think it will also lead to useful companies to do more useful things, but also new companies to feel more comfortable building in crypto.
No, I do agree with you on that first point, especially, Mert. I think that there tends to be in the way, and listen, I've been publicly critical of meme coins. I'm not a big fan of them in general, but I do think that, like you said, we ascribe no agency to the people that trade them, and the Trump token was never pretending to be anything but a meme coin. Now, there's people out there who, in bad faith, are saying that it might be X, Y, or Z, but like Trump's tweet said, this is the Trump meme. And I think that why that's different from something like the ICO boom was, back then, people would say, hey, we're launching, we wrote this whole white paper and we're launching a coin that dentists are going to use or whatever. And people would buy it thinking that dentists were going to use the coin. And then if they didn't, they were misled and they lost a bunch of money based on that. Meme coins, it's in the name. It's a meme. You're gambling. And like, in the US, we believe that people have a right to gamble, right? The Supreme Court legalized sports betting. So there's no question that people are allowed to gamble. And I think that, yeah, this coin, I would say, is probably going to trade like other meme coins, in that over a longer time horizon, it's going to lose a lot of its value. And I don't necessarily think that like that is I don't know, like a terrible exploitation of the people trading it, because they know, or they should know, what they're getting into when they buy it. So there's that that disclosure being made. I think the thing I want to ask you about, Mert, as far as the way that this is all talked about, is I think there's a lot of people posting saying basically like, well, look, Trump just onboarded, I don't know, hundreds of thousands of users. I don't know how many people bought this thing. It's impossible to know. But Trump just onboarded all this volume into crypto. And is that cope? Like, I feel like there's can be like the crypto industry in the US feels fairly like it has been treated in a way that was manifestly unfair by the SEC under Gary Gensler. And it should be treated like a real industry that's building real useful businesses that provide value and all of that stuff. And when we talk about those kinds of businesses, we talk about things like DPIN, payments, stablecoins, etc. And I think the way that this is talked about is like, oh, all of these people are onboarded into crypto via the Trump meme coin, and they're going to like turn around and start magically using DPIN. And I don't necessarily see that as being the case. I think it's probably a lot of like younger men who were texting each other moonshot links, and they bought the Trump token, and in a month they're going to lose a bunch of money on it, and it'll have been a bad experience. And that to me seems net negative for this vision of crypto as a serious industry that regulators should be supportive of instead of actively antagonistic towards, like the SEC has been for the past number of years.
So I would say two things about this. One is, so certainly the posts that say, well, Trump onboarded 500,000 people or something like that. Those are, I understand where they're coming from, where they're silly. And this is not a crypto thing. It's a startup thing. Okay. And what I mean by that is onboarding doesn't just mean top of funnel conversion to click the link. I mean, it certainly means that, but the much more important thing is, of course, retention. Any app ever, okay? Retention is the thing that you look at if you want to actually build a business. And so if you imagine a case where, for example, the city that you're living in already uses crypto for payments everywhere, just hypothetical, obviously there's no such a thing today, and you just got more people into crypto, and maybe you made some money instead or whatever, okay, then perhaps some of them will stick around more. And I don't think, I would say, if I'm to just make up a number, probably 5% retention is what I would guess out of 500,000 people or something like that. Very small retention for sure, but some retention. And so I don't think it onboards people through that. I think, and we already said this, in terms of determining whether something is a net good or a net bad, well, what does net mean? Net means considering everything, right? The inflows, outflows, and all sorts of different dimensions. And I think that the vector of better regulation is so strong that I think it becomes a net positive, because now people, and by the way, here's the ironic part of this. That regulation was actually disallowing legit people more than it was disallowing speculative things, right?
Yes.
When you place these regulations and restrictions, the degens are still going to degen. The only thing you've really done is you've scared actual legit people who want to just put, I don't know, corn futures or something on the blockchain, okay? Or RWAs or stable coins. That's what you've done. And so if the regulation from a meme coin, or resulting from a meme coin shifting the Overton window, is such that all of crypto benefits, then actually the more legit cases are the ones that benefit the most, right? Because those people are very risk averse because they don't want to do anything wrong and all these things. And one stat that you already talked about is how the stable coin supply on Solana grew. Okay. Now let's look what happens in a year with better regulations. How much more is that going to grow? How much more RWAs are going to be traded? Real estate markets and more legit markets in general, right? So I think from that perspective, it's a net good. In the short term, obviously, it tends to say it's a very simple way to think, right? You can just say, oh, well, he took this money, he didn't really do anything, therefore this is a grift. But what's the second order thinking of that? In my view, it's that the regulation will become a net, because I mean, also let's not forget the previous administration was about as anti-technology and crypto as imaginable. I mean, they were suing everything left and right, not giving anybody reasons, all these things. And so now that Voldemort has vanished, I think there's a much brighter future.
Yeah, I tend to agree with that. Obviously, multiple things can be true at the same time, and beware anyone who tells you exactly what you want to hear all the time. I think like you can say that look, the the Trump coin was a cash grab that personally enriched Donald Trump, and arguably there are negative impacts of that as far as the public perception of crypto. However, you have to pair that with Paul Atkins presumably coming in to lead the SEC. And the SEC under Gensler has been to everyone in crypto, and I think just if you look at it, very unfair. And like you said, Mert, it created an environment where meme coins were still being traded, but people who wanted to build interesting, legitimate businesses that are big, bold experiments, and maybe they will or won't work, they just weren't allowed to. They weren't given the regulatory clarity that they needed to actually exist. I think if you look at the fact that besides Coinbase and some Bitcoin mining stocks, basically no crypto companies were able to IPO in the US, even companies like Circle that has a very legitimate business model. Um, if you look at just how long it took Bitcoin ETFs to be approved, even though it was already clear that there was investor demand and the market was mature enough to handle it. Um, and even the SEC filing a lawsuit against Nova Labs, which is the developer behind Helium, the really popular DeepIn network, on its way out the door. Like it's very clear that um, that engagement didn't happen in good faith. And look, like like crypto has a history of scams. Like FTX was really bad and really shook regulators. But I think if you're the SEC, you have a duty to let the market kind of decide whether things fail or don't fail. And when you treat an industry writ large like a just it's everything is a scam, you don't actually let good actors flourish. You create short-term thinking where you make hay while the sun shines and you let people trade meme coins and you never really build anything. I didn't look into the Helium lawsuit, but it's just sad because it's like Helium is, whether or not it's going to ultimately be successful, it's trying something really bold and interesting and also kind of in line with like progressive values of bringing down like big telco and stuff. And there just was never good faith engagement. And so, yeah, to conclude a lengthier thought, I think the Gensler SEC leaving is a net good for crypto. And you would hope that, like you say, Mert, like short-term thinking is such a problem in crypto. You would hope that with an SEC that's going to engage in good faith, you get a return to kind of long-term thinking and building bold, ambitious things. Even if around the edges you have your occasional Trump meme coin, which isn't the best.
Yeah, I think like the takeaway is shit regulation actually harms good actors much more than bad actors, and shit regulation means worse use cases. And if somebody wants to completely shatter the Overton window by launching a shitcoin, I like that because it now means more legit use cases have a better chance of releasing products that people use without fear.
Is there anything as far as the Trump token and just the craziness of the weekend that we haven't covered, Mert?
I believe the one other thing probably is Coinbase just basically not working at all for crypto or Solana. So to give you context, although I'm sure everybody's heard of it at this point, Coinbase is quoting roughly anywhere from 100 minutes to 1,000 minutes. And I believe some people still haven't gotten their crypto after a day. And what's basically happening is, and the part that pisses me off about this is that people then, if you go on Reddit or something, they'll be like, well, I'm never using Solana again or something. And it's like, to be clear, there's absolutely no, and this has been confirmed by Coinbase, although not actually reflected in their copy, let's say, that it is a Coinbase problem. And it's a very simple problem, which is kind of what's annoying. Their internal ingesters, okay, so like indexing and perhaps maybe indexing and then updating their internal ledger, cannot handle the speed of Solana. And by the way, that is, in my view, extremely embarrassing, because not only can every other exchange do it, but that is a Web 2 problem. The very normal Web 2 problem. At Helios, we at least handle 3 orders of magnitude more indexing than that. So just for reference. And then, okay, it's a PvP environment, right? And so what happens as well, these guys are pushing their own chains and their own things, but they can't even do this. It's not even incompetence anymore, it's malice. I still think it's incompetence. I don't think it's malice in a direct sense, like we're just going to not fix this because we want our thing to succeed. I think it might be like indirect malice in that they're, how does a big company work? Well, you have your business KPIs and stuff that you quarterly plan, and then you say, well, this is a P0, this is a P0, this is a P1, this is a P2, this is a P3, all these things. And perhaps Solana was not a P0. And Coinbase has not been very Solana friendly, or let's say knowledgeable, since before, or since while I was there. We used to work there in 2021, 2022. Nobody really knew how Solana works. The few times that I did see people talk about it, it was really not talked about in any favorable way. And they're quite behind there. Most of that, I think, is due to the demographic of the company being very early ETH people. So that's obviously, that exists. But I think there's 2 lessons here. One is, first of all, there needs to be more competition, and there is. Outside of the US, there's a lot of exchange options, but perhaps within the US, there's not that many. And so there's Gemini, there's Kraken, and then I'm not sure I don't think Backpack is kind of there right now, but I think they're still trying to get regulatory clearance, which, by the way, we just talked about. But then there's alternatives. There's Sphere, there's MoonPay, and by the way, I don't. Everybody talks about this since the second I entered this industry about, well, we don't need centralized exchanges. Everything should be done decentralized exchanges, self-custody, all these things. And I'll hear like 500 pitches a year from some DeFi protocol that says, well, we want to compete with Binance. We want to take over Binance. We want to be Binance but decentralized. Everybody says this. Well, let's do it then, right? I mean, shit, the biggest exchange is not working, so let's do it right now. And so, convince your friends to use decentralized exchanges. Give them alternatives, right? If you are in DeFi, this is the time for that marketing effort. This is the time where you tell that story, right? This cannot happen on this exchange, etc., because we don't have to use these weird things to process your shit. The chain itself does it.
Yeah. So not to shill another centralized entity here, but a very easy onboarding process that I've had. I haven't bought any new crypto in a little bit, like from fiat, but for a while, I think there was some kind of agreement between PayPal and the Solana Foundation where essentially, if you go to PayPal and you buy PYUSD on Solana and then send that to a Solana wallet, the transaction fee is covered. So if you put in $10, you get exactly $10 in PYUSD, and it shows up as $10 in your wallet, which basically no onboarding method lets you do that without fees. So I don't know if it's still the case, but at least as recently as a month or 2 ago, it was. So if you're looking for a way to onboard, that's a very cheap way to do it. Some free alpha for you. I think as far as Coinbase, their Solana protocol guy is kind of active on Twitter, and it seems like from what he's saying, it's like, look, we built our and for people who might not be technical, data indexing is basically like you ingest all this blockchain data, which is just nonsense, and then how do you make it actually readable so Coinbase knows what to do with all that data? He's basically like, we built our data indexing systems a long time ago, and they just like haven't been kind of bespoke built for Solana the way that maybe they should be. And it's hard for me to think that it would be a malicious move. I think it would be a huge own goal on Coinbase's part, which is, obviously they have an Ethereum layer 2 in Base, but that is one business line among many. And I think their biggest line of business always has been trading fees. And so if people can't trade the hottest asset of the moment, that is actively bad for Coinbase's own business. So I would think that they're working on a fix for this, but yeah, I don't know. You were there, right, Mert? You kind of saw how that worked up close.
Yep, I know how it works. And yeah, I don't think it's malicious. I would say neglected more than anything, because I don't think these people, or I won't say these people, but the majority of leadership, I don't think necessarily believes in Solana too much, or maybe even has opinions on it, but then they do have a lot of opinions on Ethereum, right? And so I would say neglects more than anything, or just perhaps I'll use the word ignorance, because I do think it's actually somewhat ignorant to not understand that Solana has this much activity and that it will keep growing, and that you should be ready for it. And the reason I'm comfortable in saying this is because the other exchanges don't have this problem. But I don't think it's malice.
Mm-hmm. Yeah, but could be interesting to see. Is now the time where another centralized exchange seriously challenges Coinbase's U.S. kind of dominance? We will have to see. But with that, I think we'll end the episode there. Mert, thanks for coming on such short notice, and yeah, thanks listeners if you made it this far. Please make sure to subscribe, share this podcast, all that good stuff. It's going to get really crazy in the next few years, it seems like, for crypto, and we're going to be here kind of covering all the Solana stuff as it happens. So really appreciate y'all, and we'll see you in the next one.